From Dorsey's Twitter goodbye to Nissan's electric vehicle acceleration. This is the week in numbers. 10% is how much Twitter shares surged earlier this week. It happened after company CEO and co-founder Jack Dorsey announced he would step down from his role. Dorsey will now focus on his job as chief executive of digital payments company Square, which also announced this week it would rename itself Block, a reference to blockchain and cryptocurrency. $17.59 billion is the amount Nissan plans to spend as it accelerates towards electrification. It's the first time the Japanese automaker has revealed a comprehensive electric plan. Nissan said it aims to spend the money over 5 years. Company COO Ashwani Gupta.
It's very important for Nissan to show where we are going next. And today is the plan. It's a vision, it's a direction, which is talking about future with the strategic priorities, and one of the strategic priority is electrification.
179.8 million is the confirmed number of US shoppers who bought in stores and online from Thanksgiving Day through Cyber Monday. The survey from the National Retail Federation showed the numbers were down from 186.4 million a year before. Online shopping took a hit. It was down 12% on the year, but on the bright side, in-store foot traffic rose just under 14% from a year ago. 9% is the tumble shares in troubled developer China Evergrande saw on Monday. The fall came after the firm's chairman Hui Kai-yan sold 1.2 billion shares, raising around $344 million. Investors continue to worry about the property firm's ability to pay back more than $300 billion in liabilities. And 20% is the fall ride-hailing app Grab saw for its shares on its Nasdaq debut. It followed the company's record $40 billion merger with a blank check company and was the biggest US listing of a Southeast Asian company. The price might have dropped, but Chief Executive Anthony Tan said he'd celebrate regardless and then get back to work.
Thank you so much.
The threat of default loomed over Chinese property firm Kaisa on Friday. The company announced it had failed in talks with offshore bondholders to extend the maturity of a $400 million debt payment due next week. Kaisa has now begun talks with some of those bondholders over extending the deadline. That's according to two sources close to the matter. A group of offshore bondholders who say they own 50% of the debt in question sent Kaisa a letter earlier this week. They offered extra time to negotiate the repayment of the bond and avoid a default. They also put forward an offer to provide $2 billion of fresh funding to the company, but sources say major progress has not been made on the offer. Shares in the troubled Chinese firm dropped sharply on Friday at almost 9%. The stock has fallen around 75% so far this year. Kaisa said it was still looking into selling assets and extending or renewing debt obligations, but the company cautioned there was no guarantee it would be able to meet the December 7th maturity deadline. Kaisa is second behind Evergrande as the largest dollar bond issuer among Chinese property firms. Evergrande is also in trouble with more than $300 billion in liabilities. Like Kaisa, Evergrande has looked for ways to raise capital to fight off a default.
The pace of hiring slowed abruptly in the U.S. last month. New figures from the Labor Department out Friday show the economy added 210,000 new jobs in November, significantly below economists' forecasts for as many as 500,000, in line with the hiring surge in October. But at the same time, the unemployment rate plunged down to 4.2%, the lowest level since February 2020, just before the coronavirus pandemic. And average wages rose. The report paints a picture of a workforce that still has not fully recovered after a year of health-related restrictions. Millions who lost their jobs have not returned to work. And the spread of the new Omicron variant of the coronavirus poses a continued risk to the economic rebound. Investors, however, initially liked the report, sending stocks higher at the market open. The less than stellar hiring number eased investors' concerns about the Federal Reserve's quicker tightening of monetary policy. Analysts say the report probably will not change the Fed's timeline for paring back its massive bond purchases, but it could give the central bank more room to say it does not have to accelerate the pace of reducing those purchases, especially amid the uncertainty posed by the Omicron variant. Earlier this week, Fed Chair Jerome Powell said the central bank would consider a faster wind down to its bond buying program, which Wall Street saw as opening the door to earlier hikes in interest rates.